Closing beat, everybody. Happy Tuesday. How you doing out there? Hope you're having a good day. Enjoying some of those comments before we started here. We're just playing around with some of the thumbnails. Lots of changes coming to the closing beat. New look, new sort of feel and everything, and all kinds of new flexibility graphics and things that we'll be able to put up and show to kind of expand this show. I enjoy putting it together every day for you. So we're just playing around with some thumbnails. I do appreciate guys the comments there, and except for the one. Come on, man. How old do you think I am? Anyways, welcome to the Closing Beats, our daily stock market update show where we just kind of strip away the garbage. We'll cut through all of that and just get into what's going on for you guys. We do this every day for our customers, as well as you guys that want to participate with us. So I'll go through everything, and then maybe we'll take a chance at answering some of your questions out there. If you are one of our customers, every Thursday we do a class for you guys, and this Thursday we're going to cover the stimulus bill in its details, all that geeky stuff. We did it before with the tax changes, the Trump tax law there, and the Secure Act. So instead of just going over the normal general stuff you read, we go into detail and kind of cover every single thing. Just finished reading the entire bill. So we'll cover that on Thursday. Your jazz artist of the week is Dizzy Gillespie. He's got a song called Groovin' High, and it's a familiar song. So if you're not familiar with jazz, you're probably familiar with Groovin' High there. Also, we started on Instagram. We're calling it Outside the Virus, right? Everybody's talking about the virus. Not that we shouldn't be, but everybody's talking about that. And so we just thought we'd cover some of the things going on daily in the stock market that have nothing to do with the virus, but that aren't really getting any headlines because it's not as important for the moment, but maybe you find it important. So check it out at Instagram. If you would, throw us a follow there. Do appreciate that. Let's get into the stock market here. We got 410 points to the downside. You wouldn't have guessed. That really kind of came later in the day there. 42 down on the S&P and 74 on the NASDAQ. NASDAQ is the better performing index of the day, the Dow being the weakest there. Just negative headlines not being supported like we did see yesterday. We had a lot of negative headlines yesterday, and the market just sort of gobbled them up and kept plowing forward. Today, the market wouldn't shrug off the negative headlines there. We were higher overnight. We were higher early this morning. We did float around back and forth between higher and lower for the day in the morning there. And then we just started bleeding off. Negative headlines, of course. You had Trump floating the infrastructure bills, probably why you saw Caterpillar higher today. But we got reports out of Spain that their number of casualties since the virus started has hit a high. Fatalities in New York spiked. Actually, we've been tracking all this data here. I might post it somehow for customers, but if you look at New York, if you start at 10:30 yesterday, 10:30 Eastern time or New York time, right? 10:30 yesterday, they had 790 fatalities. By 4:30, they were at 914. Markets didn't like that data there. It got a really impressive spike there. Also, you had Goldman Sachs adjusted their GDP number, says going to be down 34%. That's not good either. So the stock market responding to that. You also had the Fed now doing repurchases for foreign central banks as well, which before the headlines get to you and we move on, that's not, it sounds like a bailout. It's not actually a bailout. What they're allowing is they're allowing foreign central banks to cash in U.S. treasuries for U.S. dollars if they decide to, and they're acting as that conduit there. So it's not a foreign bailout. I would bet you somebody's going to mess that up on some channel somewhere and make you guys frustrated. That is not the case at the moment. Anyways, rebalancing, that's going to be put to the test tomorrow because a lot of people are speculating that what we saw yesterday and into the end of the month here was rebalancing. I could actually show you a few areas where that is in fact true, but we'll see how, as far as the whole markets go, we get into that because today was the end of the quarter. That's the end. January, February, March 31st, the end of the quarter. Where we stand market-wise, we're down about 20% for the quarter. It goes down as the worst quarter ever in the stock market there. So good job. You made it through it. Hang in there. You're going to be just fine. We'll talk about the stocks that are actually up for the quarter in just a moment. We'll go through that for you to kind of show some of those names because not everything took a hit. So we'll go through those names for you there. Also, you may have noticed if you're looking at my chart here, you've got the blue line going below the red line. Now, this is known as a death cross. It's not perfect, I'll be honest, if you use the technical terms, but it's called a death cross. And the death cross is very simply where the blue line goes below the red line if you wanted to teach your kids how that works. Not as popular of a technical indicator, but it is used to identify bear markets. And so it's actually quite accurate to identify bear markets. This one doesn't apply, but I'm going to share with you. Anyways, so blue line, 50-day moving average. Anytime the 50-day moving average goes below the 200-day, it is called, which is the red line, is called a death cross. Anytime the blue line goes above the red line, it's called a golden cross, used to predict expanding markets or bull markets there. Let's take a look here. We've got some stuff for you. So death cross here, used to predict bear markets. However, you don't see it talked about as much because this time it doesn't apply. This is the one time in recent history where a death cross does not apply as far as predicting a bear market. Why? We're already in a bear market. Remember, this was the fastest that we've ever fallen in history. So by the time the old death cross comes along, it's too late. We're already in a bear market there. It is a good indicator as far as looking for bear markets. In this case, it just doesn't apply. However, we did take a few stocks out there to show you the stocks that are now being pulled with it. None of these also apply in terms of identifying a bear market because every single one of these stocks is currently in a bear market. But if you believe in that, the technical indicator there, and you believe it leads to lower prices, well, there's a handful of stocks that you might want to look at in terms of those continuing. Just a little lesson to share with you here today. You really can't expand on it because, like I said, this time it just doesn't really apply. Anyways, like we talked about, you got the NASDAQ beating out the S&P 500 today, meaning it held up versus the other ones, so it didn't actually gain anything today. The Dow was the weakest on the day, down 2%, as it kind of gives back some of yesterday. What is most notable, by the way, is volatility. Volatility continues to move lower. So while you look at the markets today and you say, well, the markets are down, that's not good, maybe we're going to head to new lows, the fear out there is not pointing that way. So the fear index, or volatility, if you want to look at it that way, is basically just saying, hey, the S&P 500 here is settling in a range. It's not a good thing, by the way, that we're settling in a range near the lows, but nonetheless, that's what you have going on there. Let's go through the sector breakdown. I'm going to start actually by going back to a slide here. We're going to take a look at every single one of the sectors. Can you see that? Yeah, you can. This is every single sector since the start of the virus. The date that everybody is using for the beginning of the virus is February 19th. Just after Valentine's Day. If you look at every single sector, of course, and you probably already knew this, every sector is down since February 19th. I've got the performance listed for you on the charts there on the right-hand side. If you're interested, energy is the weakest consumer. Staples is the strongest in terms of holding up the most. So what we did is we went through and we said, all right, let's look at which ones are holding up the best. You got consumer staples, as previously mentioned. You've got utilities and technology in the mix as well. And by technology, that's things like Microsoft, names that aren't hit as bad, not your physical technology companies, meaning they get chips and stuff from China. This would be technology, the sector as a whole, but that's the reason why it's holding up. So if you look at the sector leaders, that's what you have. If you like looking at things that are showing relative strength compared to the market, or at least as much relative strength as you can have, there you go. There's your sector leaders. To the downside, your laggards, energy, retail, and financials. A lot of people think financials are a good deal down here. They are under. Let's just dissect where are the good ones. There are your good ones. And where are the bad ones. So there are your bad ones. And that's some of the data that we have to show today. As far as the stock markets go today, you got REITs. They just did not do too well. REITs, 2.6% to the downside. The concern is that people aren't going to be able to pay their rent. You already see companies like the Cheesecake Factory telling their landlords, we're not going to pay rent. Well, those companies make a lot of money. So what happens when the little old individual apartment renter can't pay their rent? Well, that's going to hurt the REITs because a lot of these companies are in the multifamily apartment space, also in the multifamily commercial space as well. Could be warehouse space, anything like that. So that's what the concern is there. You got broad weakness in the sector today, meaning many of the stocks inside of the sector were down on the day. We're about 30% up off of the lows there. It's just going to be a weak area with a lot of volatility going forward. Utilities, same thing there, down today about 4%. Broad weakness, also about 30% off of its lows there, but volatility in the utility space is like 500 plus times normal. So if you have utility stocks and you thought you were going to ride this thing out sort of in these calm waters over here, it has been anything but calm. You can look at some of the names. Duke Energy, extremely volatile, and Con Edison's been a favorite to look at just because of the volatility. I'm not suggesting it. It's just super volatile compared to its norm. So you got to expect that. Home builders lower on the day as well, down 3%. Came in about 30% off the lows there. Now it's starting to settle in this area right here, just like the stock market. Is that a good thing? I don't know if that's a good thing. I don't know. I think it's a little early still to tell. But remember, when you're looking at home builders or the XHB, that is not just Lennar and Pulte Homes and Toll Brothers and things. That's going to include things like Home Depot. So Home Depot is down today. Lowe's. It's going to include things like Mohawk Carpets, right? Mohawk had a weekday as well. I like talking about Floor and Decor because I just love that store. It's got all kinds of cool things. You can play with tile and designs and stuff. So their week as well. Now that's included in it. So when you think of home builders, think the people that build the homes, the people that provide some of like the vanities, the tile, things like that, carpet. That's what home builders are. Paint, Sherwin-Williams, things like that. So it's not just home builders there. Sector-wise, you got communication services. Not too bad. Basically finished up flat on the day. Most of the stocks in that space that we look at, like Facebook, did good today. Not too bad, right? Relative strength. Alphabet 1.3 to the upside, and Netflix there 1.2. Those grouping of those stocks make up almost 50% of the sector, so that's why we look at those. Healthcare riding along, looking good. Only about 0.5% there. It's been higher now 4 of 6 days because it did finish lower on the day there as well. Up 20% off the lows. This is a tough area for this to keep going. Now, if you're a healthcare investor or you're in this space and you see healthcare stocks take a break, maybe chop around in a range there, I think that's understandable. Sector-wise, this is a tough area to chop through. You've got a lot of consolidation in there. You've got a lot of people that own shares around this price, and that causes maybe some decisions to be made here where they're going to be break even or people are back to having a profit. Well, when you have all that volume inside of a small area, it makes it tough for a sector or for an individual stock to continue. It's real obvious to see on a chart. And maybe we'll keep following up with it so we can show you how that goes. All right, oil. Well, actually, oil was higher by as much as 8% today, which doesn't look like it, but it was. It closed up 1.5% on the day. This is the definition of rebalancing. Exactly what's happening right here. It's all rebalancing going into the end. Imagine if you owned oil at $40 a barrel, and that was 40% of your portfolio, and now it's worth $20 a barrel, and now that's 20% of your portfolio. If you want to rebalance, you've got to buy more oil. So that early morning action was rebalancing in crude oil. It's a great textbook sort of chart to look at if you want to see rebalancing actually happening on the last day of the quarter. That's up to you. All right, that's all I have for sector-wise. Let's go through some of the stocks that are currently that finished higher for the quarter. So if we look through here, I bet you can guess one of them. Citrix. So Citrix is on our new high list almost every day here. It was the first to get back to new highs. It was today's only new 52-week high, by the way, but that was one of them there. Norton LifeLock. They are higher on the quarter. What'd they gain? 30% on the quarter. Some of the other ones, like the biotech stocks, Regeneron Pharmaceuticals, higher by 26%. Digital Realty, hanging in there, although super volatile. Digital Realty ended up with a gain of 18% on the quarter as well. I'll just name a few others here that are higher on the quarter by double digits. You got Clorox, Netflix hanging in there. This is if you like your strength. We'll go over to the chip space, give you a few of those. You got Akamai Technologies. They were higher by 8% on the quarter. Don't forget Newmont, the darling of the gold mining space, even though that's getting a little bit more volatile in there. You got Eli Lilly and Amazon. So just to cover a couple others. Amazon was only up 5% for the quarter, but still not bad. Markets are down 20%. There's a handful of names that are stronger on the quarter if that's something you like to look at. Like I mentioned a minute ago, you got 5% of the stocks above the 50-day moving average. That's only 24 stocks today. We're floating in that range, 5% range, give or take. Our only new high was Citrix, as we talked about that one. 0 new lows. Let's see what we got here. You got 0 new lows. For new highs, you've got Digital Realty, Netflix within 5%, Eli Lilly within 6%, ATVI within 8%. That's a new name that snuck up there. And here's something interesting. If you look at all the stocks in the S&P 500, how many stocks have a long way to go before getting back to new highs? What we did is we just looked through all of them. We said, okay, let's see how far each one of them has to go. There are 99 stocks that still have 50% or more to go before they get back to highs. 99, 1/5 of the S&P 500 has 50% or more to go. 2 stocks that are the furthest away, Apache And Diamond Offshore, they've got 82% and 68% to go, respectively. Whoa. We've got some major rallies needed there. Let's talk about the virus adjustments. Every day I said I would try to bring you any stocks that were adjusting something, any companies that were making adjustments because of the virus, to show you how much action is taking place out there, how quickly people are responding. And then if you're not interested in the virus stuff, on our Instagram, we've got Outside the Virus. It's a short thing. We cover just a few stocks, let you know what's going on, not virus related. Check us at Jazz Wealth on Instagram. Okay, ConAgra said they see significantly higher demand for their products. So that's actually good news, virus related there. That's like Marie Callender, Slim Jim, Hunt's Ketchup. That's some of their brands. Anyways, good news for them. Carnival Cruise is cutting their dividend. That's horrible. You probably saw it coming, but they're cutting their dividend. They were paying $2 a share. It's like 15% yield with these prices down here, but sadly they're cutting it. So $2 a share going away. They're cutting their buybacks. They expect to see a loss for the year of 2020. American Airlines needs $12 billion from the government. They said if they can get it, there'll be no layoffs for at least 6 months. Spirit Airlines, I actually like Spirit Airlines. I mean, I know people love to hate them. They're cheap and everything, but I like Spirit Airlines. Anyways, Spirit cancels all flights to New York City, New Jersey, and Connecticut, because those are the hot spots there. The Gap is cutting 80,000 retail workers because they're not working. There's nobody there. They're cutting executive pay as well. Visa said they saw their transactions deteriorate. They were trying to use an aggressive word there to get your attention in the second half of the month. So the last 2 weeks, they actually came out with that today. And Domino's Pizza said we're withdrawing our guidance. International stores are mostly still closed. U.S. stores are still mostly open. That's what you got there. Restoration Hardware beats on earnings, by the way, by 13 cents. Costs are higher. That stock's been pummeled. Covered that one earlier for you on Outside the Virus. And Ford says it's going to make 50,000 ventilators in the next 100 days, if that's necessary. There you go. You got construction spending, manufacturing numbers tomorrow, vehicle sales coming out tomorrow. Those are some of the big headline numbers you may see coming out. You got Kimco coming out with 28 cents in dividends, and that's it. I believe I have covered everything today a little bit faster than expected. All right. Well, let's see what you got here. I think the cruise lines, by the way, are going to be included in the fourth version of the stimulus. They're talking about that. I believe I read that. So we'll see. Yep. Yeah, Visa is saying the transactions are lower, man. We'll see what happens. Visa down here around 160, lost 2% on the day. We'll see. Volume's still very strong there, so we'll see what happens. Yep. 50,000 ventilators coming. That's just from Ford, by the way, so that's pretty impressive. Give me 100 days to make 50,000 ventilators. I think that's impressive. I love it. How much of an impact can retail traders, you'd be surprised, how much of an impact can retail traders have on the markets? You would be really surprised here. They actually track fund flows out of ETFs and mutual funds, and a lot of that is retail-based. Most of it's retail-based, mutual fund-wise. So you be surprised. All you guys on your Robinhoods and wherever you're at smashing that button to get in and out of stocks, that adds up quick. Don't think for 1 second you can't have an impact. Yep. Any stats on volatility? We could get back into that. Yeah, I have covered that in the past in terms of volatility, not only going into this next month, but also this month in an election season. So a little bit further there, huh? There you go. All the companies cutting dividends, what do you expect in terms of their stock price in the near future? Well, I think the damage has been done. For something like Carnival Cruise, I mean, it is severely, severely oversold at this point. Are you really going to have people running away because they feel there's no dividend? Or do you have people say, well, look, if I bought this stock here at 13, what are my growth prospects, right? So Carnival Cruise Lines is typically fairly stable, just moving along, some good years, some bad years. But now that the stock is sold off so far, you've got a different mindset there. So I think Carnival Cruise could be okay in the long run because they're not paying $2 a share on a stock that really doesn't grow, it doesn't do anything exciting. They're paying on they're removing their dividend on a severely discounted stock. I think you'll still find people are attracted to the idea of scooping up a dip whenever they feel, that this thing is starting to get behind us. And I bet you the first day that starts to happen significantly, is the first day you see the number of new cases go flat. Doesn't even have to go down. You've got number of new cases, just plug it along, higher, higher, higher. The first day it just goes, whoop, no new cases. Same amount as yesterday. I mean, we could see that. There you go. More downside to go, you think, Tandra? I think that, and I get this question all day. People think, oh, did I miss it? Should I be buying here? We're not done with down days. You know, like we didn't just walk away from this and now everything's fine. We've got earnings coming up from companies that at least report. A lot of them are going to delay earnings. So you probably got time. You're going to see down days. Like today, yeah, down day. But you're not getting left in the dust, basically. Yep. I love it. You guys helping each other out there. I appreciate that. I'll wrap it up there. I think we've pretty much covered everything. Tried to share some different things with you here today. Hopefully you enjoyed. If you do, maybe help us out. Hit the thumbs up button or subscribe. Do appreciate that. We'll be back tomorrow to do it all over again. And you guys have a great rest of your day. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.